What's up everybody? Welcome to the Stocks channel. My name is Cory and today we had a very bullish day in the stock market across the board. The Dow Jones closed at yet again another all-time high, and the S&P 500 is now flirting with also closing at all-time highs. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we saw SPY closing up 0.8% today, and we did get another price action close back above that critical level at 418.50. Remember, SPY already closed over that level one time, and this is now the second close over that level, which does confirm we're likely going to see SPY start running towards the next price targets. The next price targets above are at 423 and 426. Now remember, this is a bullish breakthrough because we did see price action holding up above critical support. The price action is back above all the moving averages, and the moving averages are all stacked to the bull side. So we saw a triple test of that 20 simple moving average acting as support, and we did hold up above that critical support level at 415 throughout this entire volatile period. So we did see some spiking in the VIX, and we will still do very critical analysis on the VIX, but it is important to know that the price action and the trend on SPY were very bullish today. We also had an increase of volume from yesterday, and that was on a bullish breakout through that resistance level at 418.50. So we'll now have downside support at that 418.50 level, but the most critical support level is still right around 415. On a break and close below 415, that would signal that the bullish trend is reversing and this market's starting to roll over. But right now, we don't see a rollover in the market, and we still see strong price action with strong trending. Note the Bollinger Bands are still squeezing, which does imply that a big move is coming. Remember, Bollinger Band squeezes can fire to the downside or the upside, and we don't want to make any assumptions. We want to let the price action do all of the talking. Right now, the price action is saying bullish, but obviously that's subject to change, so watch that critical support level at 415. If we do break down below 415, the next support levels we want to watch are at 412 and right around 406.50. Also note the 50 EMA is down here around 404, which is going to be a critical level of support if we were to close below that 20 simple moving average. Next up is the NASDAQ 100 Triple Qs ETF, and we see the Triple Qs going up 0.75% today, but still closing below the 5 EMA as well as the 20 simple moving average. We're still holding up above the 50 EMA support right around 329, and we've now tested that level for 3 days in a row, and we continue to hold up above the support trend line. So that support trend line is the key to holding this bullish rally and the key to making us go to higher highs and possibly going into the 350s on the Triple Qs. So critical downside support on the Triple Qs are going to be 329, the support trend line right around 328, and if we do break down below the trend line, we're likely coming down to fill the gaps at 325, 321, and possibly down around 315. So this 327 to 328 support level is extremely critical if we do start breaking down below 329. Upside resistance is going to be right around 333, and we still got to break and close above into that gap above, which is right around 334 to 335.70. So we still have a ton of resistance for the bulls to break through on the Triple Qs, but it's not out of the realm of possibilities because this could have been a correction and the tech sector could be getting ready to go higher. So watch the critical resistance levels, and if we do break back above that 20 simple moving average right around 337, the Triple Qs should be back into a full bull trend, and we could easily see the next price targets being all the way up here into the 350s on the Triple Qs. So watch the critical support because right now this is actually a very decent risk reward setup. If you know your risk is defined at a close below 327, and you know your potential upside is all the way up here at 350, well, you can do the math on that risk reward setup and see that this is an absolute great buying opportunity potential for the Triple Qs. Next up is the Dow Jones, which has been a behemoth lately, and we see the Dow Jones going up 0.94% today. We see it on increasing volume from yesterday, and we're breaking out and starting to run towards our next price target at 347. So remember, the Dow Jones never got out of the bullish trend, never got out of the bullish price action, always staying above that positively sloping 20 simple moving average. So the Dow Jones is looking very bullish here, and it looks like we're going to have no trouble getting to our price target at 347. Remember, anytime we get to these price targets, it does increase the chance we could see volatility in selling and a possible pullback. So prepare for that, and we could see money leaving the Dow and possibly going into the beat up tech sector in the very near future. Next up is the Russell 2000, and we see the Russell 2000 pretty much flat today, only going up 0.09%. The Russell 2000 did retest that critical support at the 50 EMA right around 221 for the third day in a row and did close above that level. So we no longer have a full bull trend, but the price action is still holding up above this critical support level right around that 50 EMA. So on a break and close below the 50 EMA, that would be a bearish development and we would start to develop more bearish trending. From here, the Russell 2000 needs to get back above that 20 simple moving average at 224. So the critical resistance is 224, 227, and 230 with downside critical support at 221 and right around 220. Next up is Arkk, which was down 2.88% today, and we continue to see the Arkk ETF struggling. Arkk broke down out of the wedge and did fail to hold up above support at 109. There is another support level right around 106 that does seem to be holding up, but also note that Arkk is in a full bear trend and does have very bearish price action closing outside the bottom of the lower Bollinger Band. Arkk could get a dead cat bounce soon, but that dead cat bounce could be shorted and we could see Arkk continue to go into a bear market. So watch the Arkk critical supports at 109 and 106 with critical resistance above at 115 and 123. Next up is the VIX, which is our fear indicator, and the VIX is probably one of the most important things to be paying attention to right now. Notice on the VIX that we did get a Bollinger Band squeeze, and that squeeze did start firing to the upside, but the VIX cannot close above 20 or even the 50 EMA for that matter. This is actually a bullish indication because while the Bollinger Bands are expanding, there's still the chance that this squeeze can fire to the downside if the VIX can't break out and close above 20. So watch the VIX very closely and remember that above 20, volatility is back and we could continue to see a deeper stock market correction. Below 20, anywhere between about 16 and 19, that's normal volatility and it's completely expected. If the VIX starts going back down below 18.2 and bleeding out and heading lower, that means we're going to see brand new all-time highs across the board in the stock market and we're going much higher from here. So watch the VIX very closely at these critical levels because it's going to tell you everything you need to know about the future of the market. Next up is gold, which had a very bullish day today and it's in that full bull trend heading up towards our next price target at 1829. Downside support should now be the 5 EMA right around 1800 and that 20 simple moving average right around 1776. Next up is silver, which also had a very bullish day today. Silver is back into a full bull trend and it looks like it's going to have no trouble getting to the next price target at 2760. Downside support is going to be right around 27 and 2650. Next up is Bitcoin, which is currently down about 2%, and Bitcoin is back above that lovely $55,000 level. Remember, Bitcoin is a little bit of a whipsaw around 55,000, but it is currently building some bullish developments above the support level at 55,600. Bitcoin is bullish above 55,000 and needs to break above 61,000 to see brand new all-time highs. The brand new all-time high price targets are 67,000 and 75,000 with critical downside support at 55,000 and 48,000. Next up is Amazon, which was up 1.1% today, and that Amazon level of the 50 EMA right around 3274 is holding up as support. We have critical support levels at 3261 and 3209, and note that Amazon did lose its bullish trend. So right now, Amazon needs to break out back above 3363, the 20 simple moving average at 3374, and then we'll have price targets at 3458 and 3573. Next up is Tesla, which dropped over 1.1% today and did break out to the downside of the wedge. Normally, when you break out of a wedge to the downside, it does mean that we could be breaking down, but you normally want to see a retest of that breakout. So watch to see if Tesla is going to get rejected at 670, and that will verify that Tesla is likely coming back down to support at 618. On a break below 618, Tesla could be coming all the way back down to the 550s with upside resistance at 670, the 50 EMA right around 699, the 20 simple moving average at 709, and then the top of the resistance trendline breakout right around 738. Next up is Apple stock, which went up 1.28% today, and Apple is back above the 50 EMA resistance level at 129. Apple does not have a bull trend, and Apple has a ton of resistance above. Resistance levels on Apple are going to be 131, 132.6, and 134, with downside support at 129 and 128. Next up is the financial sector, which had a monster day today, going up 1.49% and blasting right through that upper Bollinger Band. The financial sector has strong bullish price action with a very strong bullish trend, and it could be due for a cool off after this monster move. Next up is the industrial sector, which went up 0.7% today, closing well above the 5 EMA and still holding on to the very strong bull trend. Next up is the healthcare sector, which went up 0.13% today, closing back above the 5 EMA yet again and still holding on to the strong bullish trend. Next up is the energy sector, which went up over 0.5% today, closing outside the upper Bollinger Band in a very strong bull trend, and the energy sector does look like it's going to continue to run in this bullish rally. So going back to the S&P 500, you can see that across the board we have bullish sectors and we're starting to see some strength returning to the tech sector. The S&P 500 is about to break out and possibly form brand new all-time highs, which could bring us into the 423 to 426 range. Remember, the higher we go, you want to reduce your risk and you want to lock in profits and prepare for a potential stock market correction. Right now, all of the technical indications of the price action and the trend on the S&P 500 are still hinting towards all-time highs. We need to pay very close attention to that Bollinger Band squeeze on the VIX and make sure the VIX doesn't get out of control and we don't see volatility flooding back into this market. So watch the price action very closely at these critical levels. And remember, on the Stocks Channel Discord, I'm doing intraday updates and analysis to always help you stay on the right side of this market. I'm also bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join by clicking on the link in the description of the video. Next up is our trade idea Shopify, and we see Shop getting sold off today, going down over 2.6%. Shop did close below that 1098 level, and it could be time to cut Shop loose for a loss. This is now getting into the higher risk area because we could be seeing Shop coming all the way back down to 1026. You're going to have critical upside resistance at 1098 and that 50 EMA right around 1166. Normally on a breakdown below support, if you want to take on the risk, you can hold it for an extra day to see if you're going to get another price action close below that level. But right now, your risk on Shop is some percent below this critical support level at 1098. And if it continues to close below that level, you will want to cut it for a loss because it could be going much lower. Next up is Disney stock, which went up 0.15% today, and Disney did retest that critical support level at 181. Remember on Disney that it does have earnings coming up next week, and it does look like it's going to be a critical breakout level very soon, either to the downside or the upside. Upside resistance is going to be the trendline breakout right around 183, the 50 EMA at 185, and then we have price targets at 188, 191, and 193. The critical downside support level is 181 with a weaker support level right around 178.80. Remember, below 181, you need to define your risk level, and that's going to define how you make this trade. I can show the risk reward setup for you real quick here, and you can see that if we go up to our price target at 193, our downside risk is defined by some stop loss below 181. So in this scenario, our stop loss would be 2.67% below 181, and our upside potential would be a risk reward ratio of about 2.64. So this is one of the best risk reward setups you're going to get in this trade, and you know your risk is defined by some percent close below this support level. So Disney still has a lot of potential, and we need to wait and see which direction this stock is going to break out for this trade idea. Remember, if you want more trade ideas, they're on the Stocks Channel Discord, which you can find out how to join by clicking on the link in the description of the video. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.